My name is Giorgio Guidetti. I'm one of the co-founder of ETHMilan. I'm very pleased to, kick this interesting panel off on global markets, institutional access. We have, international players here. We have Joe Axisa from Axis Group, Benoit from Boerse, Stuttgart Digital, Jordan Matthews from Iron MoonPay, and Chiara Rikabi from 21 Shares. So yeah, first and foremost, maybe would be a great idea to have like a very small round of what does your firm project actually do, what are you guys focusing on right now, and in the context of institutional, crypto adoption, what is the effort that you guys are actually like focused on the most?
Yeah, so Joseph, managing partner of Axis Group. In a nutshell, we're a legal, regulatory, and corporate advisory firm. We service anything from DeFi clients, on-chain, off-chain, hybrid companies, crypto asset service providers under MiCA, asset managers, and the intersection of, I would say, all the previous, client typologies that I mentioned. We work with some of the largest B2B and B2C crypto payments companies in the industry, Tier 1 DeFi protocols, the skies of the world, and the like. Yeah, that's it in a nutshell. I'm a lawyer, so these guys are probably more interesting than I am.
Which one? Yeah, no problem. Hey everyone, Benoit here from Boerse Stuttgart. So Boerse Stuttgart is a very traditional German stock exchange, 160 years old, and we provide secured, compliant infrastructure for institutions who wants to provide crypto trading and related services to digital assets. So right now, really mostly working with large banks across Europe, Tier 1 banks. Everybody is looking at different aspects of the digital asset, tokenization, stablecoin trading, etc. And we provide them with all the tools they need, the wallets, the liquidity, the distribution, etc., to make sure they succeed in their endeavors.
Hi there, Jordan Matthews from MoonPay. I work on the IAM product. And at MoonPay, we are building the operating system for value. So with one single API, we integrate across virtual accounts, crypto deposits, agentic payments, and essentially building that at scale. Most recently, probably heard for Deal and for PaySafe, and now we're really pushing that cross-border in emerging markets like LATAM and doubling down on our regulatory mode of having licenses in every jurisdiction. Thank you.
Hi everyone, my name is Chiara Rikabi. I am Director, Head of Italy and Canton Ticino at 21 Shares, at Zurich-based issuers of exchange-traded products on crypto. I focus on the business development of 21 Shares. The platform now offers more than 60 products which are listed on the major European stock exchange. Now they are also available on Borsa Italiana, as well as on international markets like Nasdaq, Dubai, and Australia. Our aim is to make the access to digital assets secure and simple through traditional bank accounts or brokerage platform. And in particular, I work very closely with the institutional investor to support the integration of Bitcoin inside their traditional investment portfolio, increasing risk-adjusted returns and diversification. Some of our institutional clients have already expanded into diversified altcoin strategies, increasing returns while managing overall portfolio volatility.
Beautiful. I think we can kick off. The first question I have is for you, Chiara, and it's mostly about like when you talk to these institutional clients, right? What is the main objection that you still get? From these players? Is it like volatility? Is it the regulation? Is it what is it mainly?
Yeah, maybe you can think that the main objections are related to staking, custody, compliance. Yes, there are some questions about those topics, but actually the real objection that we usually hear from institutional investors is, yes, we would like to have crypto, but the bank doesn't want. So it's not that the traditional banks don't want to do crypto, or it's not that the traditional bank can't do crypto. They simply don't want, because currently crypto is still a taboo topic that they don't want to touch. And this happened despite the huge success of the first of the launch of the first ETF spot Bitcoin in USA, despite the listing on Bourse Italiana, and despite the fact that, for example, the MiCA regulation framework has given an harmonized regulatory environment. They still don't want to go crypto because the traditional banks don't want to take a position and to explain crypto to their final customers. It's not now a technological or compliance issues, but in my opinion, it's a cultural problem. And it's where we have to work on in this moment. We have to spread education, and we have to help the industry to make a kind of reset, to make a mindset shift, to understand that crypto is part of the established financial markets.
Yeah, I completely agree, and I would like also to extend, this question also to you, Jordan and Benoit. Like, what is the main concern in general, like what you guys have when you're dealing with this kind of institutions, this kind of players? Yeah.
Absolutely. I actually totally agree. I think the big issue is the cultural issue. Like, I think in banks right now you have quite a few teams actually that really understand their interest in this product. And again, like, I think we have to take a quick step back and look at blockchain. And then from blockchain you go to, again, stablecoin, tokenization, crypto trading, I would say. That's three big areas. And in those three, there's definitely a big interest for them. There's a lot of potential, I would say. But obviously this potential hasn't reached all the teams, all the decision makers. You still have a couple of guys who are for, a couple of guys who are against, and you are in the middle of this situation where it's really, I believe right now, more of a cultural, I would say, problem. The second thing is where there may be a bit of diversity is around the MiCA regulation. I think in some countries where regulators are very proactive in delivering MiCA, and they're working very closely with actors. For example, we've been lucky to work very closely with the BaFin. We're the first MiCA license in Germany, and BaFin has been quite proactive on that. And I think right now, unfortunately, there's still an arbitrage in some ways between different MiCA regulation, and I think also that doesn't help, unfortunately, the push at different banks across Europe.
Yeah.
So I know your take on this.
I mean, to add to those points, which I do both agree with, I'd say it's the compliance piece. So I think that, working product and engineering, we are only as good as what we're allowed to build. And I think having the right regulatory licenses in the right jurisdictions, sitting down in the rooms with the right players makes a big difference. Of course, if you look at MoonPay most recently, like, ability to do virtual accounts in New York with with this BIT license, that incredibly unlocks a huge potential for institutions based in the US. And then, as my peers correctly said, it's putting the right people on the other side and having really good senior compliance people at the crypto companies, such as MoonPay and some of our competitors, of course, and putting those in front of the banks. So.
Right, natural. Like, I keep hearing about regulation, MiCA, and all that. I want to ask you, Joe. Like, do you think, first and foremost, like, has a clearer regulatory framework helped in terms of like getting people less skeptical and making things like easier for all the parties involved? And in general, like, what's your take on what's being discussed right now as
Yeah, so I think it definitely helps. I think. Like, it isn't by chance that institutional capital has started flowing disproportionately more to crypto in the past year and a half in particular. There's movements on the regulatory side in the US, which everyone knows about. There's MiCA in the EU, and with more clarity, usually, obviously, you attract more capital because you're dealing with predominantly risk-averse institutions, but risk-averse in comparison to crypto because we're quite risk-on, I think, as an industry in particular. I think it added clarity a lot when it comes to token issuances, ICOs, and the like. I think when it comes to certain product offerings, which are like of a hybrid nature, off-chain, on-chain, and you want to get a license, there's a bit more hoops to kind of hop through. The con, so overall, I would say decent pathway, decent progress in the EU in particular, but as my colleague over here has said, there is a bit of arbitrage when it comes to regulator approach and regulator interpretation. Different regulators have taken very different stances on MiCA authorizations in particular. So, for example, there's a huge discrepancy between the Italian regulators' approach to the Spanish regulators' approach to the Maltese regulators' approach. You know, the Maltese regulator has been regulating it for 7 years because we had one of the initial frameworks for crypto in the world. So they have technical experience, supervisory experience, supervising exchanges of very large size, OKX, Crypto.com, and the like. This has led to those regulators that never actually had a national framework for crypto fall behind a bit. So there is indeed a lot of arbitrage when it comes to where you want to get your license. And that's now a pivotal choice, because the pivotal choice now isn't get a MiCA license. The pivotal choice is where, which regulator, what's the risk appetite, will my product actually pass through the checks and balances that they're going to impose. So overall, we've had very good progress, I would say, regulatory clarity in particular. That's brought a lot of institutional capital in. At the same time, I would say we don't have full harmonization across the board from like an application of the regulation point of view.
Yeah, that's actually, you know, very well put, and I can share this, and like, you know, this whole flow of conversation makes me ask you the next question, which is, what is, you know, the main difference that you see, Chiara, like in terms of like narrative, you know, between like years ago and the current one? Is it only like a regulatory change, like, or it's, you know, a broader?
But in my humble opinion, at the moment, the language is either too retail or too institutional. On one side, we have the language of a retail investor, which is too superficial, a little bit mixed, because they are unprofessional investors. They offer a lot of opportunities, but also a lot of inefficiencies to the market. On the other side, we have the institutional investor who use a narrative, a language which is specific, very technical, and can be understood only by a few highly sophisticated investors. So the market is is a niche market. It's still a niche market. I speak from the Italian and Canton Ticino, which is the Italian Swiss part point of view. The market is still a niche market, concentrated at two extremes, retail or institutional investor. What is missing, what is still missing in this market is the middle of the ground, and I mean the mutual funds, insurance company, pension funds. These players are sophisticated, they have a lot of competence, but they have expertise on multi-asset portfolio management, commodities, bonds, equities. They lack competence on crypto. And so now the crypto competence is only up to a very few niche of institutional investors who are super specialized, and they probably represent the next generation of the Italian investors. And so I say again, we need to be focused on the education so that the market can become larger also for the other market segments.
Absolutely, and you mentioned like there's this duality between like retail and institutions. And I want to ask you, like Jordan, like you guys at MoonPay have been, you know, doing a lot of stuff, and especially on both ends, like both on the, you know, the consumer front, but also on the institutional side. So if you can tell us more, like what are you actually guys, you know, doing on that front, and what is the most like, if there's like any skepticism from institution, how you guys like mitigating that and working around that? And
well, I think the main thing is that we're solving for is banking fragmentation. So working in the stablecoin space myself, you know, you're only really as good as, one, the compliance behind you, as my peers have correctly said, and the other thing that's vital is the necessary banking access. And what I think has been really impressive at MoonPay is the banking relationships at tier 1 banks that we've been able to establish because we have that compliance mode, because we put in the extra time to actually explain the technicalities of crypto to non-crypto natives. Myself, I come from a very crypto background all my life, but I also understand that that needs to be explained to people in a different way. In the same way, I'm not a portfolio manager. I don't do, that kind of investment banking and markets. I wouldn't know about that. So it's the same in the opposite way. The other thing we're solving for is simplification. As I said at the start of the conversation, we are building the operating system for value. And that's not just a sound piece that I'm saying. I mean, it's in practicality. We have one API integration that you can connect to virtual accounts, crypto deposits. You can do embedded product, which is what we specialize in now, as we see with our launch with PaySafe and Deal. We're giving institutions the ability not only to do B2B payments themselves, but then to give their customers as well, which is why MoonPay is leading the way in scaling some of the biggest and greatest neobanks across all the markets. And finally, the main thing that we're solving for is real-life use cases. What do I mean by this? So let's say you live in Argentina and you need to be paid, or you have workers that live in India or rest of the world countries. We're giving people the ability to pay those people in real time. It cuts out the banking delays. It cuts out the checks. But to make people from a traditional background understand and feel safe, people often think about it in a skeptical way and say, well, crypto is dangerous, volatile. Well, in stable coins, it's one-to-one, it's pegged. The other thing to point out as well is it's actually more compliant because there's more checks that we do, checking the wallet, checking for sanctions, for fraud, etc. And also then working with tier 1 banks. We have to abide by those regulations that they uphold. So if anything, your money's safer on chain. And finally, the other thing now is with the agentic payment flow, I don't know who's used it yet. I'd advise everyone to Moon Agents. I mean, with a few clicks of a button, I work in software engineering background, product, but non-product people natively can now make payments. I can sit here right now and I could buy a coffee or I can buy something on Amazon with a few clicks of a button. We live in a great age, and I only think that will double down and have a compounding effect.
100%. And Benoit, like we were talking even before, right? Like the world is kind of like the two worlds are colliding right now, right? Like you used to have the DeFi, and then you used to have institutions, and this panel is clearly show that this is no more. You have companies that have been like maybe natively crypto that are more and more approaching the the institutional world, and you have institutions which are opening up. So in your experience, like has it been like a refreshing experience, like working with new type of companies? How is the workflow and in general, like the experience, and has it been like something refreshing? Is it difficult? Is it a great thing? Like,
yeah. Well, I think the particularity of this cycle, if we refer to the Bitcoin cycle, but Bitcoin Pizza Day, so is really, it's a B2B driven cycle, really. I think we've seen a lot of projects who were really retail oriented so far, now really switching to this B2B phase. And actually we see with this kind of event, in general, I mean, we do quite a few events, most of us, right? The barrier is really falling down right now. You have a lot of suits with hoodies talking to each other, and everybody trying to build more or less, I would say, a common platform where we bring a new kind of efficiency to the financial markets globally. There's also, like us, we're in Europe, right? We're trying to make Europe relevant on a global scale, and I think this is an opportunity for us as well. We have a lot of things we can build or rebuild with new themes and new tools that can be quite a big opportunity for us. So I think it's on all of us, really, the European actors in general, to try to team up. I quite like a quote I heard yesterday, which was like, right now, big players shouldn't try to compete too much on this market because there's no real market. I believe it was one of the banks here, and I think it's totally true. I think right now the most interesting things to do is really to build those best practices, to build those standards, to build all of that, to bring up the trust, and really team up, and then later on we can look at who is the best and let the best win.
100%. And it makes me ask you, like Joe, we've heard talk about European or local projects, but then we also have clearly overseas companies which are entering Europe and basically people from all around the world which are sometimes struggling, sometimes not, to get into the market, and even the new regulation and so on and so forth. So in your experience, has MiCA been, and is the regulation mostly something that have you seen more abroad actors entering the European Union, or local players? What's the landscape there?
Yeah, I think I'll speak from our client portfolio. We're handling about 20 authorizations at the moment across crypto, payments, and the like. All of them are from the US or Asia. So I think one main problem with MiCA is that the initial compliance here that you have to overcome from a cost perspective to be eligible to get the authorization is actually quite high if it's a European bootstrapped initiative. The reality is that raising capital in Europe is 10x more difficult than raising capital in the States. So that's problem number one. Problem number two is, if you can't raise capital, you need at least $500,000 to operate your company in year one post-authorization. So you need to bootstrap a lot of capital. What we're seeing is not a lot of European native companies applying under MiCA or under payments or the hybrid. We're seeing a lot more of the US and Asian companies entering the market. Silver lining is that with Malta in particular, we're seeing a lot of interesting on-chain products actually get authorizations. So we've worked on a layer 2 on top of Ethereum for global settlement and stablecoin remittance. We're working on a swap and bridge function, which will be authorized under MiCA, whereby you can transfer assets from one chain to the other. So we're seeing interesting products that are compliant with MiCA and work with the regulation actually come to the European Union. So I would say from an international point of view, it's been quite successful, because I think people forget that the European market is almost as large as the US market, if not almost the same. That's something. That's something that we forget. Sometimes,
we always forget about that.
Yeah, but it's actually very true. Sometimes we're too bearish on the EU. I'm the first culprit of this, by the way. If you don't see my Twitter, because I've posted some very bearish European Union tweets. But overall, there are a lot of positive elements to take into account. The fact that you have the largest B2B card issuer in crypto wanting to get a license in the European Union, the OKXs, crypto.coms, blockchain.coms wanting to enter the European market, these are signs that this is a workable regulation. So much so that if you look at Genius and Clarity in the US, 70-80% of it is basically lock, stock, and barrel MiCA. There are only very minor caveats, I would say. So overall, it's been a success. My fear is that we need more guidance on the MiCA side in particular. So I think ESMA and DBA need to do a better job at giving guidance or certain provisions that are highly, highly subject to debate at this particular point in time. But overall, it's actually quite bullish, I would say.
Thank you.
Yeah, I'd also add to that, and something that, to add to the remittance point, we're seeing a lot at MoonPay, is that piece from European companies then looking at adjacent companies, let's say in LATAM, for example, is a great use case. We have a lot of those type of neobanks where they're euro-dominated, but then, let's say, for example, then they have lots of people who move to Latin America, and we see a strong use case increase in presence there. And I think that really shows, the age that we live in with the remote mindset and work culture, which then really goes hand in hand to crypto, because, we all have basic human needs. One of them is the ability to buy things, to be able to drink, eat, survive, live. And that's something that crypto really helps with. And I think something else to add there is that, to add to my peers' points, is that actually institutions are starting to realize it's better to buy than to build. It's better to go to a MoonPay or a Coinbase or someone like this, and actually, because they have the expertise, and we've seen that a lot at MoonPay. People want us to guide them on their crypto roadmap, their strategy, and we're talking about tier one banks. We're not just talking about small players, and I think that's very fascinating. So we can only have a compound. I like to call it the compound effect of crypto. In the long term, this only has a doubling and maximizing approach, which I'm very bullish on as well.
Thank you for the insight. And I think we're approaching the end here, because we were already running incredibly late. So I just want to, I think we can get like one last, remark from everyone. I think one of the most interesting things that I wanted to ask you, Chiara, as a last closing remark is, where do you see demand going, in the future? Is it really like changing? Is it just Bitcoin and Ethereum, or it's, like there's other products people are getting interested into? And maybe just like a closing remark on if we meet next year at, not at Milan, at Milano Blockchain Week next year, what will have happened? Like which kind of products will be huge by then?
It's a wide question, but I would like to answer making a comparison with the traditional equity market. The traditional equity market started over 2 centuries ago with the London Stock Exchange, and at the beginning it was very simple, just stock trading, and step by step we have seen more sophisticated financial instruments, for example, market indexes, dividends, or futures, as well as a huge ecosystem of derivatives has been created. I think that it will happen also to the crypto market, because now crypto trading is plain vanilla, just buying and selling Bitcoin and Ethereum, but step by step it will become more sophisticated, and the crypto market will develop in the same way the equity market did. We as 21 shares, but in my humble opinion, I think that we don't expect to wait for more than 2 centuries, but the process will be much more faster. In my opinion, in the next 5 years, the crypto market will probably look like much more modern than the current stock market. And we will have sophisticated instruments like crypto swap, lending, borrowing, all these kind of instruments. And we have also to remember that tokenization will absorb a great part of the traditional financial markets. So this will be the main transformation.
Yeah, I want to also hear your take on this, Jordan.
Yeah, I mean, to add to those points that I do agree with, I mean, what we're seeing is the adoption of non-native crypto people to our market. Why are we seeing that? Because the use case has real value. So let's take, for example, MoonPay recently launched MoonPay Institutional. What are we doing there and why? Well, what we're doing is giving the biggest industry actors access to liquidity faster. How are we doing that? The only way that is possible with crypto, and stablecoins in particular have no volatility. So the misconceptions of, oh, my money will be, that's just not true. That's a misconception. And if you look at the growth of stablecoins, I mean, it's went from, the market was in the hundreds of millions to over 6 billion in 30 months. Then that is compound effect clearly in play. And more recently, you know, if you, again, talk about MoonPay, is that we launched our trade API this week, which is a single place that my people were saying here about how you can do swaps on chain, how you can do trading simplified. It's an easy route in to integrate. And the great thing is, once you get into the ecosystem, then you connect to everything else. And it only can have a positive compound effect. And I'm very, very interested to see the future for trading, the future for hedge funds and such, and how they are now already at MoonPay becoming some of our biggest interested parties. You know, MoonPay B2B ramps powered by Iron, that is a massive play and has really helped a lot of high-frequency trading firms actually get liquidity and get it to the market in rapid time with the great advancements that we have using stablecoins without any problem of losing some of that money due to volatility.
I think as a last point, I'll give it very, very short. I think next year you're probably going to see a lot of asset managers at Milano Blockchain Week, because right now they're very, very interested in the vault products. I mean, you see Morpho, it's grown exponentially over the last couple of months. You know, the instant settlement is a great tool for reconciliation, for fund management, fund administration. So I think the trend this year is probably stable coins, payment with stable coins, crypto cards, credit or debit. Probably next year, you're going to start seeing a lot of funds using vault products to manage their internal asset allocation.
Yeah, I have like the, same question, but also something more specific, maybe a little bit provocative. Is it? Do you think that when we will be looking back at the stock exchange closing, for example, over the weekend, we will be thinking about like even similar to when we see in the movies, they're like placing orders with like the papers, right? And is blockchain, is the whole technology upon which this all is built, is it like a positive driver in terms of this? Do you think this is is going to happen at some point?
I definitely think that's the future look like. Like we look at like weekend closing as those guys throwing the bills in the baskets, right? Like back in the days. That's for sure. But and to kind of mix with your previous question, I think what's very interesting and what I hope to see by next year, more than just product specific, etc. You mentioned stablecoin, definitely stablecoin being used for collaterals, etc. All these great things, but it's really for this barrier to come down between traditional finance, DeFi, Web3, all of that. Like I would love to see that really being teared down and really having this convergence between those different worlds, right? And to the benefits of the investor. Why are we doing all this, right? We're doing all this because there's a lot of inefficiencies in the financial market that is like hundreds of years old, and it doesn't make any sense that you can send an email in 2 seconds, but you take 2 days to settle the trade. So that's why we're doing that, to unlock these efficiencies and to make sure that investors get the best product people can provide today. So by next year, I hope to see a bunch of banks releasing crypto trading product, and then more for Vault integrated, and like all of this great stuff having integrated into your banking app, and literally in this room, mostly all of the financial system, the tech world, etc., talking to each other and keep building.
Does anyone has anything more to add?
Yeah, just to add to that, I think you both made a great point there in terms of like tokenized trading. I mean, we live in a market of access for 24/7. People want to trade on the weekend, so there's no other way to do it than crypto. It's very interesting. And the other thing that as my peer was stressing there about banks, it's in our favor, as myself, a crypto native person, it's in our favor to help banks because, and to be quite frank, in the stablecoin industry, we're only as good as the banks that serve us, because you have to eventually get that off chain. You have to, and that's very important for us to. It's a working relationship that we both need to work in unison from both sides. And it's something that you see the best players in crypto and the most forward-thinking banks do it. It's no surprise that JP Morgan have their own arm of a blockchain company. It's no surprise that Citibank want to work with the top crypto firms, because they understand that if they need to work with and don't feel like it's against. Whereas if you look we talk about Europe, right? The problem with some European and UK banks as well is they're quite anti-stablecoin, and it's a protectionist game, which in the long run is a lose-lose for them, because people will then just go back to peer-to-peer payments, or people will move their money into different markets which are more supportive, like my peer said, that give Vault opportunities and the ability to stake. I mean, staking and earning on your Vault is higher than banking payment interest. Why would any logical person not want to do this? So it's really exciting. And one last point I'm also interested in trading, it's slightly adjacent, is prediction markets. I'm finding it so fascinating. We live in a world now where you have the poly markets that powered by MoonPay, for example. Like what we're seeing there, the trading flows on that is incredible. And people want to be on chain and actively in markets 24/7. So then it only goes back to the point, if it's not possible for the crypto tokenization, then what will happen? But yeah, I could go on all day about this.
Which is exactly what we want, by the way. So if there's no one has anything else to add, I think we can close this off. Thank you so much, guys.
Thank you.
Thank
you. It was a pleasure.
Thank you.